Ladies and gentlemen, we do hope you've managed to gather all the important takeaways from our very first opening keynote. With that, it's now time for an opening discussion around managing the cost and complexity of governance, risk, and compliance, featuring Mrutyunjay Mahapatra, former Chief Executive Officer, Syndicate Bank, and member RBI Innovation Hub and NABARD Board of Supervision. And this session is being spearheaded by Jatin, Meswani, Senior Partner, FSS, Kyndryl. So let's deep dive into this very interesting opening discussion. Here we go.
Thank you. Thank you for the nice introduction and good morning to everyone. We have seen over a period of time in last 2 years, tremendous growth in banking. In fact, my view is, I think this JAM, that is Jan Dhan, Aadhaar and Mobile, which is actually really driving this three initiative, and the mobile omnipresence is driving the growth. And on top of it, UPI. If you see in last 2 years, UPI transaction has tripled. As of February, we have almost 4 billion transactions. So this is really exciting time, but it also throws up its own challenge. It throws up a challenge related to how this entire connected economy, there are different sets of risk which comes in, and RBI is absolutely forever like vigilant on the way things are opening up, and they're putting more compliance for the banks. In fact, now with all this, bank is becoming an extremely critical national asset, particularly some of the large banks, and they are increasing more regulatory oversight over this. And to discuss about this, I think we have a very distinguished person with us, Mr. Mahapatra. And Mr. Mahapatra, he is an ex-MD of Syndicate Bank and ex-CDO and CIO of State Bank of India. So we can't have a better person than him to give an oversight and his viewpoint on what are the things which is driving this. So it will be a really interesting conversation with Mr. Mahapatra. So Mr. Mahapatra, really welcome to this discussions, and we are really pleasure to have you on our this discussion.
Thank you very much.
Okay, so let me just kind of put across a point for you. As I said, this is really exciting time, and how the UPI transactions are growing, the number of API connectivity which are happening, the number of banks which are getting connected. With all this, what do you see? How is essentially RBI looking at this, and what are their drivers for regulatory environment that they are creating?
Good question to start the discussion. What has happened during the past 3 or 4 years is that we are not just witnessing very rapid linear growth, we are also witnessing growth and activity on the sides, on the top as well as on the bottom. As you mentioned, with the JAM Trinity getting active, government policy getting active, and the digital acceleration of the enterprises themselves, there is a fintech ecosystem which has also become very, very active. And this fintech ecosystem, after initial everybody is running towards a goal to selective survival, has propelled one new phenomenon, which is that orderliness, domain expertise, and quick to market, along with real delta in terms of value, that is defining the marketplace. As usual, regulators do the catching up game. Whenever there is a technological advancement, they do a fine balancing act. If they start regulation straight away, then there is a problem of killing innovation. But if they allow too much of innovation, then public money is at stake. There are always vulnerable people. There are always people who are willing to get a free app and compromise their privacy. So currently, regulatory viewpoint is to support innovation. So the regulation is looking at, like any other developing nation, being regulators, controllers, while propelling development, ensuring that the ecosystem is a supportive and an accommodative one. On the other hand, what we are looking at is that there are 4 major spaces in which large amount of activity we are seeing. risk management, productivity enhancement, payments, and to some extent, what we are seeing, customer acquisition. So when customer acquisition becomes the motto, we will always see that customer-centric and customer experience-centric things happening. So the digital information, as Brettley rightly told, is moving from products to experiences. That is my take of the current scenario.
I think absolutely right that it is moving from product to customer experience. And really what my viewpoint here is that there will be always a right balance. There has to be a right balance between innovation and sustainability. As Warren Buffett rightly said, that you don't require an innovative accountant, you require someone to also keep control on things, right? So, and our viewpoint, we always feel that from Kyndryl side, we feel that all this entire risk and compliance environment, people need to keep it in mind with the way things are moving. It cannot be static. You have to think in terms of if your environment is moving towards a very agile cloud way of working, you need to create a working setup which is also in line with it. Otherwise, what we feel is that there will be a kind of a unit within the bank which is really thinking that they are part of a separate part and they are not connected. While what our view is that they are very much part of it. Any exposure they take can be exposure to the reputation of bank, can be exposure to the financial impact. And second viewpoint we have is that while bank is very good at the financial risk management, whichever, whether it's a credit risk, operational risk, they are very good at it because it's a balance sheet capital driven control system. But moment it is a non-financial risk, as you rightly said, in terms of, let's say, customer acquisition. Now in KYC and all, many banks, particularly this entire COVID scenario has driven work from home and remote video KYC. Now, just imagine that there is on one side fintech who is trying to acquire customer in a certain way, and then the old bank. They have to make sure that their processes are also aligned. It will not help just by having a KYC which is on a ready-made SaaS platform or a ready-made package. There has to be entire process which is aligned toward that. Otherwise, it will translate to a very bad experience for the customer because they expect suddenly front-end staff of the bank will say that, okay, here we are also doing things fast. And suddenly the back-end team is not aligned towards things. So I think absolutely you are right that, it has to move from product to experience, and for product to experience, the bank has to kind of create a entire environment which is glued toward that. So, and this leads to another discussion point that how do you think that the banks are spending money across this 4 elements that you highlighted? Which are the areas that they spend? What are the areas, how much they spend on technology, how much in the people? How do you kind of see that from your vast experience in running banks, running the large SBI kind of IT environment? So what do you feel your experience is?
I think your observations are absolutely right. I know Kyndryl is doing some path-breaking work. I'm familiar about this. And right now, the whole idea is, both ways, which I say that when you have method behind madness, there must be also some madness behind method. Madness being the passion, being the ability to deliver, being to orchestrate a team. So I have devised for myself and for my teams always that an enterprise or an enterprise activity has to stand on 4 pillars: people, process, technology, and governance. So if any one of them is weak, then we will have a problem. Now, companies such as Kyndryl brings process symmetry, brings governance symmetry. So if we look at process and governance, as you rightly told, a lot of companies have spent a lot of money. In the last 3-4 years, I have not seen any technology spending proposal getting rejected at board level.
Yeah.
But now questions are being asked. you have spent so much of money. What is the ROI? If not on pure rupee terms, please tell us what is the cost saving? What is the optimization gains? What is the speed to market? So now all these things are coming to get questioned. So banks are continuing to spend, and as regulators are catching up, more and more prescriptive regtech and subtech will override what we call the bank tech. So bank tech, regtech, and subtech, all these three things have to work in consonance with one another in order to deliver. What is the current spending trend? Current spending trend is that lot of studies are being made in terms of the design getting right. People have spent a lot of money. There was as a reactive response as well as vendor-driven spending. But right now, banks are getting into the brass tracks of understanding how to prioritize such expenditure. Also, at the same time, find the partners who are there for the long term with long-term bandwidth, both in terms of height and depth, so that the strategy of the particular, because 80% of the core of the organization will remain unchanged. 20% is defined by the incumbent leadership. Which direction, which priority, which vendor, which integration, all those are defined. I think you must have also seen, maybe you can tell some of the best practices, what you were seeing that, in marquee cases where, leaders are telling that this is the way forward. I think this will help, because at our level, I think the best contribution is to tell the world that this is what has worked. People now, what of the world is all settled, what is to be done, how, when, where, and how much. That is where leaders are struggling. And that is where money will be spent going to the future, putting order into activities.
Yeah, I think very rightly said. And just to give my perspective on this, the way in Kyndryl, and I will share one of our experiences outside India working with a mid-size bank in Europe. But before that, let me just give my perspective. The way in Kyndryl we see this, like in tradition, you will always see that the GRC framework, get defined first at an organizational level. What is the, accountability they want to set? What is the strategy they are communicating? And then down below, you will have processes that you set, and then below processes, you will have your application and data, and then, some of the physical control points which comes for IT infrastructure and some of the other facilities. So while this remains overall framework from our point of view, but if I kind of go and see this in a new digital era, one of the critical aspects, the way we see is the integration part, culture part, and the communication part. It is extremely important because people are moving in really rapid pace. You will have a line of business people, let's say retail head in a bank, they will be approached by a fintech company and they will offer them probably a share, in terms of additional fee income by acquiring certain client for them. Now that has certain implications from risk. Forget anything else. If you refer to RBI lending, their white paper, it clearly refer this point on shadow lending. So, one is it creates a risk exposure for the bank. Second is also, unless these teams are connected, that risk and governance is embedded across all the processes. Till that time, people will work in isolation, and whatever you design at top, that will not flow. Now, the way Kyndryl works with the team is help bank to define this framework, help them to implement. This is one area on the strategy and governance side. Another important area which we feel extremely critical why some of the things are exposed. So for example, let's take a KYC. okay, how do you, KYC takes a significant amount of cost, and I think there was one study done by LexisNexis, and it says that on an average, the large bank, a kind of reasonably sized bank spends anywhere around $15 million on just a KYC process, because various things that they need to adhere to in terms of whether the person is a politically exposed person or not, in terms of the spurious transactions history in the past. Now, what we do is that we try to automate some of this process. KYC is just one example, but there are a number of areas. Once someone studies the entire risk framework, we can automate some of the information flow as fully automated. And second area that we play around is in terms of putting analytics in place. Can any of these analytics give a visibility of making faster decision? Can it make things faster for who are doing decision? And particularly for an existing bank, the challenge for them is that they have a legacy process which is set. See, for a neo bank, whether it is Kotak 811 or Navy or any other banks, Paytm, some of these are started ground up with automated process. For traditional bank, they have many old process which is existing. There is a culture associated with it. How do you kind of mold that culture? How do you get automation in place? It is typically like cloud-based environment, a cloud-native environment versus traditional bank IT infrastructure. Exactly same. They will not have a patching, while in cloud it is all done, automation is placed and all done automatically. So those are the area where we play very actively. And in one of the European bank, what we had done was we actually kind of put a strategy in place, defined the workflow from them, and then did a significant work around IT part of the IT risk framework in terms of putting security framework, in terms of automated patching. Now, this significantly helped their time to revert and at least be audit ready. Because any bank, they really kind of are afraid, and which is very surprising, but they're afraid when the audit happens by regulator. They really want to come on top of it. So this is the area where we've been kind of helping banks. So my next question, in a related front kind of comes up is, what do you kind of see going forward, that as bank move forward and they increasingly kind of taking fintech along with them, they are driving this ecosystem, moving from a traditional to a kind of hybrid environment. So many banks are focusing on monetizing API. What do you see they should be doing in terms of risk mitigation, in terms of compliance ready? And is there any message for, even from a regulator point of view, you have any message as to any missing link that you see out here?
The banks are no doubt getting more and more conscious about the risk that is embedded into it. But currently, if they think about IT, they think about an IT risk in terms of IT security risk. Mm-hmm. Whereas governance risk and compliance is a much broader subject. We know application portfolio management, nobody does it properly. Mm-hmm. Ongoing risk analysis, business continuity planning, the secure coding practices, agile practices, some of the things that I've seen, and because now, after my public sector life, now that I'm deeply associated with a number of private companies as advisor or consultant, what I'm seeing is that the main problem is that the management of the banks are scared of a lot of expenditure. But as they say, stitch in time saves 9. Probably what they are scared of doing now, when regulatorily asked or mandated to do, they will have to spend 3 times of that 3 years from now. And that is the education. And the main thing that I told is that they're struggling where to start. Mm-hmm. There is a deep shortage of qualified people, and the vendor ecosystem has to chip in. But at the same time, I think it requires investment in people who understand both sides, because IT, putting order into IT, managing risk in IT is very, very important. Because the other thing that we can speak, because the audience that we have will understand it very quickly, is, let us say, data privacy. Today, there is a lot of lazy consents that are going in the world.
Yeah.
Customers they do not understand, they take everything. If there is a free app, they give consent for accessing call records, going into the contacts and doing everything. Now, going forward, as the legal framework and the regulatory framework becomes very tight, how do banks manage consent, privacy, and when aggregators come, then data will be called based on customer consent, which is to be verified like the KYC consent.
Absolutely.
So how do we, these are the new areas in which money will be spent. Data and analytics application and risk management has, in my view, has crossed the initial nascent stage, and it has gone into the middle stage where people are getting a little familiar. This is the right time for partners like yourself to step in and with domain expertise come in and tell them that, yes, you need not go from scratch. We understand your business and we can take it to a level where your time to ground the initiative will be far more shorter. That is where people will spend the money in saving time. Second thing that they will do is collaborative people skill building. What I used to call, that any partner is not just a partner for selling a product or selling a service. They are there also for an amount of knowledge transfer and knowledge institutionalization. How going 2 years from now or 18 months from now, whether the good practices that has been brought, because every product that has been designed is after years of research and years of bouncing back from the implementation projects, and those get institutionalized into product. So it is not that every process that is there in the manual world has to be converted during the implementation phase. Some of the processes need to be modified to fit to the project and fit to the product that we are buying, so that going forward, best practices are institutionalized. So I think in the interest of time, we should summarize in this thing, that it is necessary that GRC related incentives, GRC related people processes, GRC related products, GRC related technology will remain the centerpiece of attention outside of the growth area, but equally important. I think that is my take.
I think, thank you very much, Mr. Mahapatra. I think very well said. And your emphasis on resiliency, right? Knowledge, skills, collaborative skill building for next 2 years. They're so important and I think so relevant for the bank, because they're not just working for today. They are setting a foundation, as you rightly said, this with aggregator and few really ramp up of digital landing and other things. It is going to be a different world 2 years down the line. There is a war on talent. So all these are extremely relevant. And I think, we as a Kyndryl are really geared up, and we are really excited to be the part of this journey along with, very senior professionals like you and the banker and the regulator. So we work closely with all these people and see what bank need, where are the skill gaps, which are the area that they should focus. So with that, I really want to once again thank you very much. It was very interesting to have a conversation with you, and we will really, I think audience will have a lot of questions and they will really have enjoyed this discussion. Thank you very much.
Thank you, Jatin. What a pleasure talking to you. Because all of us at senior level owe it to the society to pass on our knowledge and try to change to the extent we can. Thank you very much.
Thank you very much. Thank you.
A very enlightening discussion indeed for all of us. And somewhere the kind of nuggets of insights we managed to gather also pertains towards the theme of the entire summit. And while we're on that theme, ladies and gentlemen, please note it's also time to move forward towards our next session. Another interesting topic coming your way on application security best practices for banking applications. So stay tuned before we get to hear from our next speaker. Our next session will begin in a few seconds.